As the housing market is shifting, the home buyers and home sellers are very confused. And I'm sure many home buyers weren't happy to hear on September 21st when the Federal Reserve announced that they're raising the short-term interest rate by another 3/4 of a percentage point. And when the interest rate goes up, of course, the borrowing power of the buyers goes down. Jerome Powell in that meeting said that it's going to be a painful period of correction. Well, we all know that during the pandemic, the home prices went crazy. They were rising a little too fast. So the Fed is trying to control the inflation and bring it back eventually to 2%. We are expecting another hike in 2022 and another one coming in 2023. Week ending September 22nd, the interest rate was 6.29% compared to the previous week, which was 6.2%. We right now have the highest interest rate since 2008. Now, are we talking about a correction or a crash? We see a lot of headlines. Everyone saw on YouTube, in newspapers, a crash is coming, a crash is coming. And actually, the talk of the crash started in 2020. What is the difference between a correction and a crash? A crash is explained as 30% price reduction or more. The correction is much smaller price decline. So experts predict that it's going to be either a single digit, maybe 10 to 20% price decline. I'm not falling for all those very negative headlines. The reasons that experts think that it's not going to be a crash: number one, lending regulations are completely different. From 2008 experience of the meltdown, lenders have learned their lessons. Their lending practices are much more strict. Hopefully they will do it slowly and incrementally, and the market will adjust accordingly. Number three is households are economically stronger. Right now they have a lot of equity. If they wanted to sell their house, they could sell their house and get some money out. They can still walk away with money in their pocket. So it's not going to be a foreclosure flood in the market. The low inventory hasn't changed much, and I feel like it's going to get worse. One of the reasons we have low inventory now is because in the last 10 years, builders didn't build enough. Builders are not building again because they are thinking there are fewer buyers. The housing starts are down by 18%, so that's not a good sign. Another reason for low inventory is the people who need to downsize or upsize will hold off because they think, I bought my house for historically low mortgage rates, and if I sell and buy another house, then my mortgage rate will be much higher. That means that inventory will stay low and probably maybe even lower than what it is now. Every year during the pandemic, we didn't see the seasonality, which is a normal trend in real estate market. The first half of the year, it's very hot, lots of buyers, lots of sellers. But the second half of the year, usually it drops down. People, the schools are starting, the holidays are coming, so fewer houses on the market and fewer buyers. That's why we always advised buyers to buy in the fall and winter, because that's the best time to get a deal. But not in the last 2 years when we had the pandemic. Everything was selling like crazy. The prices kept going in the fall and winter as well. Well, this year we're going to have that seasonal cool down. We already are feeling it. This year we're going to see even more dramatic cool down than before pandemic because of the higher interest rates. Well, what should the buyers do? There are good news and bad news. The good news is that you can buy a property now. My client just got an offer accepted. There was nobody else. If you were having trouble to buy a property for the last 2 years, now is your chance to buy that property. Right now we have more inventory because houses are staying on the market a little longer. So you have choices, which we didn't have before. And the question is, should I buy now or wait until later? First of all, we don't know what's going to happen later. Prices can go up and down, the mortgage rates can go up and down. We don't know. Nobody really knows what's going to happen. If you found your dream home, you should go for it. If you have to move, you should go for it. And it is possible that you might be able to refinance later. There are no guarantees. Don't say that Nune told me. Taking out an ARM rate may be a wise move for anyone buying right now. Then in a year or two, you might be able to refinance and lock in a lower rate. For someone who is purchasing a single family home today, let's say for 1.2 million and putting down 25%, assuming that they have a great credit of 740 or more, sufficient income and assets, a 30-year fixed loan interest rate would be 5%. 10-1 ARM is 4.25%. That can make a difference of $403 a month. If you compare a 30-year fixed loan with 7-1 ARM, which is gonna be 3.875%, the difference is $599 per month. Here's another idea that you can implement with a shifting market. Ask the seller to provide credit to cover closing costs, and part of that can be a buy down of your interest rate. The sellers ask me, should I list now or should I wait until the spring? If my house didn't sell in the fall market, I should pull it out and put it up in the spring. Well, not really. It's better, I think, to be ahead of the market instead of chasing the market, lower the price right now and get it sold. Because you have a bigger pool of buyers right now than if 2 times more we have a hike of interest rate, that might not happen. The market might be changing a little more and you have to sell for much lower price, which I'm sure is not what you want to do. Real estate is so market specific. Here's what's happening in Massachusetts. Boston and the close suburbs have not been affected by the slowdown in any major way yet. Here are some 5-year Q2 numbers from MLS. As you can see, the median sale price for a single family in Massachusetts has been growing steadily from $415,000 to $615,000 in 2022. Days on market have been getting shorter and shorter, from 54 to 23 days to offer. And here are some numbers as of end of September. Boston single-family homes sold for more than the original price, 101.24% more. That's slightly lower than in 2021, but let's not forget that the prices are higher this year. The days to offer are the same last year as this year. Median sale price to original price ratio is even bigger in an affluent Boston suburb, Lexington. The slowdown of the market hasn't really started here. Days to offer are also the same as last year. Arlington also has slightly higher numbers than last year. Days to offer are the same. In Cambridge, the home prices in 2021 are considerably lower than this year. The original price versus sale price percentage is 102%, less than in 2021. Again, days to offer is surprisingly staying the same. The towns further away from Boston will be affected by the price change more. I will be sure to report. I really want to know what you think. What is your opinion on the current market? Do you think the prices are going to go down by 30% or less? And what do you think will happen in the spring of 2023? This is Nune, Boston area homes. Thanks for watching, and watch my other videos about buying in Massachusetts.